Everything is good. I am multitasking today, so the the first half of my day was working from home. I usually take the work from home to a local coffee shop, so I'm supporting my local community, right? But today I was working from home because I had an early day. I had to make a couple of stops, couple of appointments, and then I had to come to the city, which we were going to some Jay Z event in the city, and he's doing his little run around the city with his upcoming tour. Yeah. And his show in Yankee Stadium. So I'm not going to the concert, but I came to this pop up in the city, yeah, and so that's like most of the most of the culture crew is here except for one. We're missing one of them. Um, but I said I'm gonna show up early. Number one, I'm gonna get some work done. I'm gonna get into the city before traffic, and then I'm gonna head to this event. I'm gonna go back to my car, handle business, and then go back to the event. So I'm kind of in between a lot of things today. But you know what? I'm grateful for the opportunity for everything.
Well, we're here. People are coming in. And I want to let everybody know so far as they're trickling in, thank you for joining. Thank you for being on time. Yes. I love it. So we're going to give everybody another 90 seconds or so we can get a few more people in here. And people will pop in as we come in. So we have a few people in the building already. So thank you guys again. We'll start in about 60 seconds. We're also live. We're live on TikTok and YouTube. So you guys can also, I'll be posting this stuff on YouTube as well, so you can see it. Let me see if I can. One second. I want to share my screen. Cool.
We represent.
All right, awesome. So let me just share my screen here. Okay. Cool. All right, guys. So listen, it is 7:01, about to be 7:02. I want to thank you guys for being here. You are prospective first-time buyers, and I want to welcome you here. I want to congratulate you because it's a Thursday evening in the summer at 7 p.m. and you're here. That means that you guys are serious about learning, about taking the next steps forward to becoming a homeowner. And today, I have a very special guest with me. I have Ellie Elizabeth Medrano, and she is going to introduce herself, but she's also going to talk to you about what the realtor's role is in this transaction. We're going to talk about what it takes to get pre-approved. We're going to talk about financing. We're going to talk about grants. We're going to get into the nitty-gritty of things. But I wanted to make sure that I invited Ellie. She's my realtor, one of my realtor partners, and it's super important for you to understand what her role is. So Ellie, can you go ahead and briefly introduce myself before we start this presentation? And you're going to have your moment to shine a little later on in the presentation.
Hi, everybody. My name is Elizabeth Medrano. I go by Ellie. I am a first-time homebuyer specialist, so I am your go-to when it comes to your first experience in the home buying process. I have been in this industry for about 9 years. Eric is a trusted partner of mine, so you can be rest assured that you are in the good hands of both of us. You have a great team to guide you to the closing table. So I am honored to be here. I'm excited to be a part of this and to give you some great information and confidence as you navigate through this first time home buying experience.
Awesome. I'm super glad that you're here. And I know we're going to provide tons of value for people that are here right now and for people that are going to continue to join. Guys, my name is Eric Estevez, and I am a 9-year mortgage professional, right? And I help buyers, home buyers, and investors navigate all types of financing, from traditional mortgages to complex construction and commercial loans. We're known for our transparent advice and our strategic guidance. We are your trusted partners, and we're committed to making the mortgage process smooth and successful. And today, I know we're going to talk about money, right? The cost of living continues to increase. I get it. We're in the state of New Jersey, not cheap to live here. So we're going to talk about some of these grants and some of different low down payment programs. But I also want to make sure that we go throughout so you guys can understand the process from A to Z. Right? Super important. Because I'm pretty sure, as you guys are looking at the screen, as a first time home buyer, some or all of you may feel a little concerned, stressed out, intimidated, anxious, uncertain, all or a mixture of these things. Well, my goal, along with Ellie's goal today, is by the end of this presentation, we're going to be talking for 30 minutes, and then we're going to have a Q&A. We'll stay as long as you need to because we want to make sure that we answer your questions. But our goal is so you can feel less of this. And as we continue to grow, the deeper you, to go into the process, the deeper you get into it, right? We want to eliminate all of these things, right? Super, super important. So I'm going to ask you the same question at the end, and I hope we've eased some of these issues that you may be feeling. Okay, so I want you guys to be interactive. Pop in the chat. Oh, and by the way, in the chat, I have my contact information. You'll see my contact information here at the end as well. Ellie's going to share hers. You can always text me, okay? So we can schedule a consultation, one-on-one, free consultation, so we can go deeper into your personal situation. And in a few short minutes, I can tell you what I think you'd be approved for and what programs will benefit you. But before that, right, I want you to go ahead and answer in the chat. What credit score do you think you need to purchase a property today, guys? What credit score do you think you need to purchase a property today? Do not be shy. Pop them in the chat. No answers or wrong answer. Well, yeah, some of them are. Pop them in the chat, guys. What credit score do you need in order to buy a home? We got Krisha at 620. Awesome. Great answer. Anybody else? Going once, going twice. Cool. Nasha says 580. All right. So Nashla is correct. At a 580 credit score, you can purchase a property with 3.5% down with an FHA loan. Now, I have a loan right now where a gentleman is selling his property and buying another one. But there's been some credit issues, lifes, right? And it happens to all of us, but he needs a place because he got promoted from his job. He had to move, and he's putting 10% down, and his credit score is less than a 580, but he's still going to be able to be a homeowner because we mitigate the risk of a lower credit score with a bigger down payment. So in some cases, you can go as low as a 500 credit score. Now, we're going to talk about the grants in a little bit. If you're looking for a grant, you need a 620 credit score. So when Christian said 620 on the chat, if you're looking for a grant, we need a 620. The cool thing is, guys, that if you're looking to buy a house now or in the near future, having a consultation doesn't cost you anything. I do a soft credit pull. It doesn't impact your credit score negatively, but we have a better indication of where you're at and what we need to do in order to get you to a 580 or a 620. I'm not a credit expert, right? I'm not a credit repair specialist, but I understand credit extremely well because I deal with it every single day. Because my ultimate goal is to get you into your house. Awesome, guys. Thanks for your responses. All right, we have another one. Another question. How much of a down payment do you think you need to buy a home? Light up the chat. Let me hear it. How much of a down payment do you think you need to buy a home? Is it 20%? Is it 10%? Is it 5%? 3%? Pop them in the chat, guys. What do you think you need? How much of a down payment do we need in order to buy a home? So we got 20% in the chat. We got 3.5%. We got 20%. Thank you for your participation. Right? So For an FHA loan, and we'll be talking about that loan shortly, the federal the this is a federally insured loan. You can buy a 1 to 4 family property with as little as a 3.5% down payment. If you're in Hudson County and you're gonna buy a $700,000 multifamily house, if they exist anymore, right? 3.5% is $24,000. If you want to go ahead and buy property that closer to Pennsylvania, right, or down South Jersey, and you want to buy a $300,000 property, 3.5% is $10,500. But you're going to see that there's actually programs where you can buy with zero money out of pocket, right? So we'll be talking about that. So thank you for your response. The conception of 20% down is a myth. Now, guys, let's keep it real. The more money you have saved, the better position you're in. If you put down 20%, you're a lower risk to the bank. So then you don't have to pay what's called a private mortgage insurance, which is an extra cost should you put down less than that. But how long will it take you to save 20%? If you have 3.5%, or if you can get a grant to buy a house, why not you become a member of Club Homeowner and be the beneficiary of the appreciation of a home, be the beneficiary of the tax breaks? I like to use this example, right? If you're paying $2,000 a month in rent, which is very easily what you're doing in New Jersey, right? Or more. Well, in a year, you just spent $24,000 in helping somebody else pay their mortgage and increase wealth. I just published a book a few weeks ago called From Renter to Wealth Builder. And if you stay towards the end, I'm going to share a QR code where you can scan it, you can take a picture of it, and I'll be able to give you a free downloadable copy. And we talk about the power of this because if you're renting for $2,000 a month and spending $24,000 a year, in 4 years, you would have spent $100,000. Well, if you're buying a $500,000 property and that property appreciates at 5% a year, that's $25,000 a year. In 4 years, you would have earned $100,000. That's a big swing from spending $100,000 without having a benefit, from gaining $100,000 in appreciation. That is the true power of home ownership, and that is why many of you guys are here today. Cool. So now, what are the 7 steps to home ownership? Well, the first thing is this, right? Is getting educated. Then we can go a step further, and we're going to schedule a mortgage planning session with your loan officer, which is me. I'm a branch manager, and I'm here to guide you along the way. So this is your first opportunity. You can screenshot this. Text me, 786-444-4160, 786-444-4160. And I'll text you a calendar link so we can schedule a one-on-one consultation to figure out, right, what is your buying power. In a few short minutes, I can pre-qualify you, meaning I ask you questions about your income, credit, and your assets. That pre-qualification doesn't really mean much unless we go to step number 2, which is getting pre-approved. Now, what is the difference between a pre-approval and a pre-qualification? Well, a pre-approval, I'm now verifying the information that you gave me over the phone. I'm verifying the information that you entered online. How do I do that? Well, I look at your tax returns, your W-2s, your pay stubs. How much? What are you self-employed? Are you 1099 employee? Do you get child support, alimony, disability, Social Security? Right? We have to look at all this stuff. We have to verify it with documents. Now, once you're pre-approved, right? And I run it through the system and it's like AI, right? AI reads everything. So I say this loan can be sold to Freddie Mac or Fannie Mae. We meet all the guidelines. I give a pre-approval to you and to Ellie. So now we know what your budget is. See, we not only talk about what you can afford, we talk about what you want to afford. Because although buying a house, I'm a huge proponent of it, and this is what separates wealth building, right? The average homeowner is 44 times wealthier than that of the average renter. I still do not want you to be house poor. Why buy a house if you're going to be stretched and it's going to decrease the quality of your life instead of increasing, right? So I tell you what you can afford. We talk about what your budget is so you can continue to maintain a certain quality of life. And with that, and Ellie's going to talk about her role in a little bit, she goes ahead and starts having a buyer's consultation with you and starts looking for a house within those budget parameters. She's going to find your new home. Guys, I can pre-approve you the same day in many cases, right? As long as I do a soft credit pull and I look at documents, you get a pre-approval letter from me. So that could be the same day. That's pretty quickly. But what can take long is finding your new home, and it depends on where you're at. It depends on who you work with, right? If you're working with experts like Ellie, who's a master negotiator, you're probably going to get under contract much faster than if you're working with your cousin's boyfriend, your boyfriend's sister-in-law, right? Who has a license and doesn't know what they're doing. So who you work with really matters, right? But let's say now you find your house. Once you're under your house, you're going to negotiate. You're gonna submit offer and negotiate terms, and that's what Ellie does. Then you're going to go on the contract. You're going to go something called attorney review, and then once you actually have a binding contract, from the time you have a contract, from the time you close and we fund the loan, and you actually get the keys to your house, that takes about 30 to 45 days typically, right? What varies is the search of the home. How competitive are you? Where are you looking? What's the inventory like? And again, that's why you want to work with somebody like Ellie, who's going to navigate you through those waters, right? After 30 to 45 days, you have closing day, you get the keys. So this is just basically the steps to home ownership, okay? Now, I want to get right to the nitty gritty, right? You guys clicked on this class because you wanted to find out about first time home buyer grants. We, as CMG Home Loans, were the third largest retail lender in the country. We're the second largest funder of these NJ down payment assistance grants in the state of New Jersey. We're very good at them, right? They're specific to your region. They're depending on your income. We have to look at the county, right? This is a forgivable second mortgage. There's a forgivable second mortgage and down payment assistance, which is a grant, which is forgivable, right, after 5 years. So if you're going with an FHA loan, for example, one of the cool things is if you qualify for it, you have to have a 620 credit score or more. Right now, the rate of this first time home buyer grant is 5.75%. When you Google today, average mortgage interest rates, they're in the 6.5 range. So if you qualify for this grant, you're also going to get a discount on your interest payment, which is great. Now, depending on where you're at in Hudson County, because the prices of homes are a little higher than in other places in the state of New Jersey, you can get a $15,000 grant applied to your down payment and or closing costs. In addition to that, if you're considered a first generation buyer, guys, if your parents have not owned a home, you can also get an additional $7,000 in grant money. How cool is that? Now, I want to keep it real. There's good with bad. One of the biggest setback about these grants is that the debt to income ratio thresholds are a little lower than like an FHA loan, for example. So let me explain what that means. I'm going to use this math because it's pretty simple. Let's say you and your partner are each making $60,000 a year. You're at $120,000 total combined income. I like that number because when you divide that by 12, that's a nice, easy $10,000 per month gross that you're bringing into your household. Well, in an FHA loan, okay, remember an FHA loan, and we'll talk about that in a minute, is a federally insured loan. Your mortgage payment could be close to 47%, 46.99% to be exact, of that $10,000, which means that your mortgage payment could be about $4,700 a month. Well, in the state of New Jersey, what does a $4,700 payment look like? You have to keep in mind that the mortgage payment includes several things. Your mortgage payment includes principal and interest, which is usually the biggest part of that payment. It includes taxes. If the taxes are $10,000 a year, you divide that by 12, $833 of that goes part of your mortgage payment. You have to include insurances. You got to get a homeowner's insurance, and if you're putting less than 20% down, you have to pay what's called a private mortgage insurance. Because you're coming in with a little skin in the game, you have to pay this private mortgage insurance. So in case you default on the property, on the loan, the bank still gets insurance, right, to pay the payments. So a $4,700 a month payment is probably going to be a house in the 550 range, give or take, maybe a little less, depending on the property taxes, which varies depending on where you're at, right? If you're looking for a multifamily home, that can go higher because now I can use a portion of that rental income as well, right? So that's for an FHA loan. Unfortunately, for this grant, for that same grant that you need 15,000, that you can get $22,000 for as a down payment, that maximum payment is 40%. It's $4,000, right? So now, right, your affordability drops. So it just depends on where you are looking. So there's good and bad, right? But in the end, this is a great tool for you guys to purchase a property if money is an issue, right? And this is why when I speak to people and I talk to them about their income and whatnot, I do some calculations and I say, hey, I think if you're gonna get a grant, this is what you can afford, right? So you can have an idea. So in a few short minutes in a phone call, I can tell you what I think you qualify for and if you qualify for a grant, right? Now, once we go further, like I mentioned, we do a pre-approval and I'm able to give you an official letter so you can be competitive out in the marketplace. All right. What types of mortgage do we have? We have a conventional mortgage. These are fixed rate and adjustable. You can buy a single family property with 3% down. Multifamily, a two family property you can buy with 5%. And typically the credit score requirements is a 620 minimum. I mentioned that in an FHA loan, you need a 3.5% to buy a 1 to 4 family property, and I can go as low as a 580 credit score with 3.5% down, and go lower with a 10% down payment. USDA mortgage. What is this? Well, this is a loan that's also federally insured by the U.S. Department of Agriculture. That's what USDA means. You can buy with 0% down, but here's a caveat. It has to be in a rural area. If you go to USDA.gov and you're okay with driving a little further from the city or wherever you're working, right? As long as the property is in a USDA zone, you may be able to buy that property with 0% down. Pretty cool. It incentivizes people to move further away from the crowded and congested urban areas. You still have to have a minimum credit score requirement of 620, and there are some regulations, but the cool thing is that this is also an option to buy with 0% down. Then you have a VA mortgage, and if you're a veteran here, thank you for your service. You can buy with 0% down. You need a credit score requirement of 580 minimum for veterans and active duty military, right? Now, one of the things that is not on this thing, I guess I'm gonna have to add it. Since we talked about the grant, we also have a 100% FHA financing product. If you do not meet the bill, the requirements for a grant program, well, guess what? You may be able to get $21,000, excuse me, 3.5% your down payment financed as a second mortgage on a $600,000 property. That's $21,000. The reason that's in my head is because I am helping a lady close next week because she wanted a grant and she qualified for a grant, but one of the units, she's buying a two family property. One of the units that she's purchasing was listed as a two bedroom unit. And when they went out there, it was not a two bedroom, it was an extra room, but it wasn't considered a bedroom because there was no closet in it. So now the rental income of that property is lower. My debt to income ratios had to go high. So how she was able to buy it, she was able to finance $21,000. Now again, you're financing that $21,000 and your payment is a little higher, but you still be able to buy a property. This lady is buying a $600,000 home. It came back at a $666,000 valuation. So she's buying a property without putting money down, and she has $66,000 of instant equity. She's richer the day she closes by $66,000. How cool is that, right? So now, what can or can't you use for down payment and closing costs? Well, guys, a lot of people don't realize that you can use your 401k. I bought my first house in 2008 with my 401k. You can borrow up to half of whatever you have without a penalty, right, on your 401k, and you can pay yourself back little by little, right? You can get gifts from church, from your family. If you hear, right, I know the Haitians use the susu and the Dominicans use la sociedad, right, and people, right, gift you money. That has to be documented, but it can't be used. Right now, you can sell your stocks, bonds, and other investments. What you can't get is a credit card loan, and you can't show up to the closing with a suitcase full of cash because of anti-money laundering after September 11th, right, 2001. Very, very strict with the movement in your bank statements. Not getting a pre-approval could cost you your dream home. You want to be ready. A lot of people say, "Oh, I don't want to get pre-approved." The more you know, the better you prepare. How about if you have to do something to help you be more competitive? How about if you can improve your credit score by a little bit so you can get better rates and terms? How about if you can actually get this grant program? Or what do you need to do to get to a 620 credit score so you can get it? Right? It doesn't tie you down, but the more prepared you are, the better position you'll be when you're out there looking for homes. So this is what we look at. We look at your credit, your income, your assets, right? Once we do this, this pre-approval is going to help you determine how much house you qualify for. It's going to increase your bargaining power when you're negotiating with the seller. It's going to estimate your monthly payment and your total investment. Super important. Every time you're making an offer, what is my payment going to be? How much money do I need? Right? Because if you don't know that in the beginning, and in the end it's too high for you, or you don't have enough money, you're going to spend time, energy, and money, and the house is not going to close. We're going to identify which loan product fulfills your need. Is it FHA versus conventional? Is it a grant, or is it a 100% FHA financing? You got to go non-QM because you're a self-employed borrower and you don't report the income, but you have a sizable down payment. These are all the things that a pre-approval is going to help you with. Right now, once you're pre-approved, right, make sure nothing changes from when we looked at your pre-approval. If you're going to move, if you're going to, continue paying your rent, right, continue using your credit as normal, continue working at your current employer. If you are going to change because it's a quality of life improvement, please let me know. I had an issue where a lady a long time ago had a W-2 job, and then she left her job to go work for Uber. But now, since she's 1099 for Uber, that's variable income. I need 2 years history of reporting an income, so she couldn't buy a house until she went back to work and got a full-time job, right? Stay current on your existing accounts. Expect requests for additional documentation throughout the process. This is a common thing, right? We have the lowest default rates in history because of the 2008 Dodd-Frank regulations. And we do look at documents. We do look at some of those things. And if we do a good job for you, we collect most of this stuff up front, but there is going to be additional requests throughout, right? Don't make any large purchases. Don't change bank accounts. Don't transfer balances. Don't close any credit cards. Believe it or not, closing credit cards can negatively impact your credit. Consolidating your debt can impact your credit. Don't apply for new credit that can impact your credit when you have inquiries. Don't max out or overcharge your credit card accounts. Now, I like to tell people to try to keep their credit utilization to 30%. If you have $1,000 credit limit, try to keep it to $300, because anytime you go over that, your credit score is going to start to decrease. Cool. I don't want to spend too much time on this slide because I don't like to, to talk about using your bank. Like if you bank with Bank of America, Wells Fargo, credit unions, any bank that's going to help you, I'm down. But they are restrictive because remember, banks make money on lending your money to other people. Their expertise isn't necessarily right lending money for the sake of mortgages. If you hit a pitfall, if you hit some issues, right, they're not as skilled. A lot of these people don't have their license. They don't have to upkeep it. They just function under the umbrella of the institution, right? Again, any bank that helps you, I'm all with. But we do mortgages. We're the third largest retail lender in fundings in the country. All right, real quick, and I'm gonna break it off to Elizabeth in a couple minutes. Don't skip a home inspection, right? Obviously, Elizabeth is gonna walk you through the property, but this can cost you thousands of dollars. You can purchase a house unaware of deal breakers. You can lose your negotiating power. You risk inheriting safety issues such as mold, radon, carbon monoxide. You miss having to forecast future repair costs. You might be able to buy a property and say, hey, I'm going to buy the property as is, as long as there's no issues with environmental or structural. And that's something that, again, Elizabeth is going to talk to you about, right, during the process. But you at least have to know what the future repair costs are. When do you have to replace your roof? How old is the hot water heater, right? And then you're oblivious to remodeling work done without a permit. Hey, there's a lot of basements in New Jersey that are done. Are they done legally? If you buy in a house with a basement that was done and no permits were pulled and they did electricity downstairs without pulling permits, and there's an electrical fire, right? And now insurance, you try to collect insurance and they say, hey, we're not going to pay you out because there's no permits. This was done illegally. You don't want to be put in that position. You want to know, right? And that's one of the things that the certificate of occupancy is going to help with as well. Okay. All right. Choosing the wrong team could cost you thousands of dollars. It can cost you your dream home. It can cost you time. The lender and the realtor, and Elizabeth after the slide is going to talk a little bit about what her role is. We should have a working relationship. We should be accessible and available. We should have a support team around us. Elizabeth, and I'm going to introduce her to you now. She's going to talk about her role. She is the point guard of the transaction. Why is that? Because she's going to spend the most time with you, right? And she's going to cultivate the best experience for you, and she's going to pick the best team for you, so you don't have to worry about, oh my God, who's the inspector? Who's the survey? Who's the title company? She's going to help that. She controls that ball. If you guys are basketball fans, go New York Knicks, Knicks in 5, right? The point guard controls the game. And that's what Elizabeth does. And without further ado, Elizabeth, if you can let everybody here know, what is your role, what do you do, and what separates you from other agents?
Hello, everybody. My name is Elizabeth Medrano. I specialize in real estate in northern New Jersey, but I also like to go where my clients love to go. Um, my specialty is representing first-time home buyers. So I was a first-time home buyer myself at one point, and I remember the process, and I remember how much I wish I was guided better, and how much more I wish I understood the whole process because it can be something that's complex, right? So through my training and through my firsthand experience, I have learned that I've become a pit bull for my clients. So I will fight for my clients until the very end. I will ensure that they will achieve home ownership and get into the home that they always dreamed of getting into through my guidance and through my partnerships with my vetted team of professionals like Eric and myself in order to get you through to the closing table.
Cool. Now, here's one question that I'm pretty sure we're going to go into Q&A in a minute. This is something that a lot of people ask. So I'm going to go ahead and just say it right now. Um, are these buyers responsible for paying your commission, Ellie?
It depends on the situation. So there was a law that was put into effect 2 years ago. In August of 2024, the Real Estate Commission issued a law that said a buyer's agent could not show a buyer a home without a written and signed buyer's agency agreement. This agreement stipulates exactly who pays my commission and at closing date, who it's payable by. So every agent, this is something when it comes to agent commissions, it's something that has always been negotiable. But when it comes to this lawsuit, there was a lot of miscommunication, misunderstanding that came into play when it came to this. So to dumb it down for everybody, at the end of the day, real estate commissions are negotiable. Your realtor is required by law to present to you this contract that stipulates exactly what their fee is, what they charge, in the event that a seller is not paying my commission as your agent, as your buyer's agent.
So,
Now,
I'm
yes,
sorry, I'm
go
sorry,
ahead.
I'm sorry. I didn't mean to cut you off. Go ahead, keep continue. I'm sorry.
Oh, no, no, you can go ahead.
Yeah, what I was going to say is this, guys. Till this day, 95% of all real estate commissions are paid by the seller, right? And I want to elaborate on that. Well, just think about it. If you're selling a home, right? You're gaining you're making money on the sale of it, and if you're willing to pay the 2.5%, 3% commission that a buyer's agent is requiring, what's going to happen? Well, you're going to have more buyers look at your house, more agents bringing their buyers to your house, and that is a marketing strategy to increase the demand. What is the basic law of economics? Supply versus demand. If I'm telling you that I'm not paying my buyer's agent and I'm dealing with someone that is getting a grant and that doesn't have the money to buy the buyer's agent, well, you're limiting the pool. And in the end, if you do that, the more the more demand that you bring into the table, I'm gonna get more than I want from this house anyway to be able to cover the commissions and then some. So that is still happening 95% of the time. In some cases, they're paying 2% and you might have to pay half a point and whatnot. But that is something that's negotiated in the beginning and as long as it is agreed upon, right? So don't be scared by that because still to this day, I don't remember a time where I saw the buyer right now pay the full commission for for a realtor. So do not be scared. And in the end, this is why Elizabeth is who she is, and she is a master negotiator. So even if a seller says nope, I don't want to do it, guess what? I'm pretty sure that she's going to cultivate a great contract and offer where they wind up paying all or some of it. Elizabeth, you had your hand up. You had your emoji up, Elizabeth, or you're good, or is that a high five? Hold on, you're on mute. You're on mute again.
Thank you. I don't know why it keeps
Yeah.
muting me. But yeah, so when it comes to these agreements, I like to make it transparent. It's by law, we have to make it transparent, right, to the clients upfront before we're even able to open that door for you to see the property, right? So you need to have a good understanding of who is paying our commission. The commissions are always negotiable. I always like to tell my clients my commission is never going to be the deterrent between you getting this home, right? I'm going to make my money regardless, but it is my job to fully educate you so that you can make the best informed decision for you and your family. If in the very rare circumstance that the seller is not paying my commission, then you and I, plus your lender, which would be Eric, we would have a conversation as to how we can structure your offer in a way that it is still competitive enough that it can get your offer accepted and it is still offering compensation to me and compensation to the seller's agent as well. So that requires a very good partnership, a very good team to be able to communicate these things that can be a complex topic, but we break it down to you in a way that is very easy to digest, very easy to understand, and very transparent, which is the most important part.
Awesome. So guys, we're gonna get to the Q&A part, but I want to ask you, how do you feel now? Hope you feel a little less concerned and stressed out, intimidated, anxious, and certain. At least you have two new people here that you can reach out to. You can follow us on social media and you can ask questions. Our job is to educate you, just like Ellie mentioned. So that way we can continue to putting one foot in front of the other. And you guys did just that today by being here on a Thursday evening. So guys, go ahead, scan this. This is, if you want to get pre-approved, scan. You can go ahead and screenshot it. Then you go ahead and tap it, and you'll be able to start an application. But I'll show you again one more time my phone number. But here I want you to screenshot this. This is if you guys can download your free ebook today. Okay? Very easy read, less than 100 pages. Use some good examples of some real life situations that has happened because you too can become a homeowner and start building that generational wealth. Okay, so here, take a screenshot here, text me. If you guys text me tonight, I'll as soon as this is over, I'll text you my calendar. We can schedule a call. My number is 786-444-4160. 786-444-4160. And Ellie just put her information on the chat as well. Screenshot it. Right? You can follow us on social media. Eric Estevez, the lender. Our job is to continue to educate you, right? So without further ado, what I'm gonna do is, guys, I'm gonna give you the ability to unmute yourselves and come on camera, or not come on camera, but we can hear you. Let's hear your questions. We want to make sure that you leave here much better than you did upon entering. What questions do you have, guys? Talk to me. Don't be shy. You can pop it in the chat. And if you are shy, it's okay, right? You can go ahead and text me again, 786-444-4160, and we'll be able to schedule a call. We can have a deep dive conversation one-on-one. But let me know if you guys have any questions. I'll wait for a couple minutes. If you guys don't have any questions, then we'll go ahead and log off so you can continue on with your evening.
You know what, Eric? I want to say that I think that the greatest first step is for clients to join webinars and seminars like this because it's a smooth introduction into the whole home buying process. It's very complex. It can seem very overwhelming, but we do this because it's important for everybody to know that this is very accessible for anybody and everybody's situation. Even if you're not ready today, we can come up with a plan for you, specialized and tailored to your specific financial situation so that we can one day achieve home ownership for you.
Awesome. Ellie, I have Stephanie Melendez ask a question. Do you work with first responders and do first responders grants apply to 911 telecommunicators? Great question. Okay, we do work with first responders and 911 telecommunicators do also get some grants. Now, here's the thing, Stephanie. Which grant is best for you? And this is why it's super important to get pre-approved because the grants that first responders get, right, are not as good as the NHMFA grant. We got to see, but if you do not qualify for the NHMFA grant, then perhaps the first responder grant is a second best thing. So we have to see what's best for you, right? So we have teacher next door programs. I just reached out to a couple of hospitals with nurses and doctors. We have doctor loans. We have these loans where we give our bank gives discounts in some cases, right? Like we give appraisal half of the appraisal costs, and we give reduced interest rate, right? Depending on what is it that you need. So the cool thing is, Stephanie, is that we have CMG Home Loans as the third largest retail lender in the country with all 50 states, Puerto Rico, and Guam. We have every program that's out there, not just in New Jersey, but in every state that's out there, which is pretty cool. So hit me up, Stephanie. Let's talk about your specific situation. And that's why when we get pre-approved, we say, okay, we have this grant, we have this grant. Can these two grants be combined? No, they can't. Which one is better for you? Right? So those are the things that we have to look out. But great question. Cool. What other questions do you guys have for me? So Stephanie, I did an in-person seminar in Philadelphia about 2 months ago. So I do in-person seminars. I don't have one planned right now, right? I typically don't have them in the summertime because the summertime everybody's on vacation. I usually have my first time home buyer seminars in person in the springtime, right? Right after the new year, I like to have them because people are getting ready for taxes and those kinds of things, right? So that's when I typically have my in-person seminars, unless something comes up, unless it's going to be a big event, unless somebody like Ellie and I start planning something. But the summertime is usually I usually keep these webinars only. But if you follow me, Stephanie, right, we'll stay in touch. And the next time we have an in-person seminar, I definitely will let you know. But I appreciate the question. Cool. What other questions you guys have, guys? Speak now, forever hold your peace until you schedule a call. Cool. All right. Well, hey Ellie.
Yes.
Not a very inquisitive group today, which means that we did an amazing job in answering the questions throughout the presentation. Do you want to leave the audience with one last thought before you head out?
Home ownership is not impossible. Don't be scared to rip the Band-Aid and have the tough conversation to really determine and identify what is the best game plan in order for you to achieve home ownership. It is possible with the right team, and we are here to guide you to the finish line.
Start now, right? You may not be ready today, but if you start, you know what you got to do to get there. You'd be surprised how people reach out to me 2 years later. Says, Eric, I remember you were in the seminar. This is what you did, right? This is what you told me. We had a one-on-one, and they took heed, and now they're home buyers.
That's right.
Right.
That's it.
Awesome. Well, guys, thank you for joining us. It says a lot about your character. Listen, everybody here will be a homeowner because you're here today on a Thursday evening at 7 p.m. when you could be out. Is there soccer today or France one, right?
There is. Yes. Yes,
So,
they did.
so appreciate you guys. I hope to talk to some or all of you guys soon. Text me. We'll schedule a consultation. Follow me on social media, and I'll see you next time. Thanks, Ellie. I appreciate the partnership here.
Thank you, Eric. Thank you, everybody, for joining. Have a great evening.